roller coaster ride for China over the last few months. Let's just take a look at the market movement. The Shanghai Composite has been on steroids. It's risen 150% in the last 12 months. It's fallen over 30% in 3 weeks and just 12% in the last week itself. Many experts say the dream rally is starting to unravel.
15th of June 2015. Investors in China were gearing up for a market rally. After all, it was the birthday of the country's president Xi Jinping. But all those hopes vanished once the markets dropped over 2%. Since then, the markets have been on a downward spiral, with many analysts calling it the Great Fall of China.
We have all lived through many bubbles in the past, and this bubble in China meets all the checklists of a classic mania and a bubble. In fact, in some ways, it's the most extreme bubble I have seen in the last 20 or 30 years, because there was no fundamental basis for this massive rally to take place, given how weak the Chinese economy is, and given the amount of margin debt which has been accumulated in such a short span of time.
This market fall is proving to be a reality check on the world's perception about the Chinese government.
This very basic notion that's so important to the China story, that the government can achieve whatever it wants, is being questioned. The so-called Beijing put is being questioned. And the fact that that's being questioned, I think, has a lot of people worried, because the entire belief so far has been that, yes, China has a big debt problem, but China will be able to manage this because the government is in perfect control of the situation. So the fact that that basic belief is being questioned about China is what's causing this mini panic across all China plays on the world.
As the panic mounts, investors are bracing themselves for more pain, as the rout is likely to continue.
To be honest, it's anyone's guess, simply because it's such a retail-driven market that it's functionally, when confidence recovers, and that could be a while from here.
With no bottom in sight, many brokerages are starting to raise the red flag. Bank of America says the risk of financial crisis is higher and the real economy and corporate earnings will suffer. But UBS differs. It believes that growth in China will remain at 6.8% as forecast, and the equity market meltdown will have a limited impact as it accounts for just 20% of household wealth. One thing is certain, China is turning out to be the biggest scare for global markets, even as the uncertainty over Greece captures the headlines. Bureau Report, CNBC TV 18.